Good afternoon, everybody, and welcome to today's Traders Mindchat show. We'll be talking about the trading routine that helped me to avoid the most recent drop that we've seen in the market, the routine that helped me to lock in substantial gains along the way, and the routine that has my powder dry in order to get back involved when the time is right. I want to walk you through all this, not only because it works, but because this is what I've been doing for many years at this point, more than a decade. I've had this routine, and it's the same routine that I've used trading part-time for many years. In fact, I still consider myself to be trading part-time. Why? Because right now I've got my charts up on the other screen, but I'm not glued to that. I'm glued to you guys. I'm here to help, to serve, coaching people, and you don't need to be glued to charts. That's not what trading full-time is about. Well, what full-time trading is that it's providing you with an income source, a financial resource that's going to be able to provide for you, for your family, for that. That's what quote unquote full-time trading is, at least in my mind. So while it might be able to do that to me for one degree or another, it's not where you're working like a 9 to 5, if that makes sense at all. All right, so I want to walk you through this whole process, and this whole process basically takes me, I'd say, a half an hour for the screening process, and looking at for the screening process for looking for specific patterns, and also I would say another half an hour or so on top of that to analyze the performance of stocks, performance of the stocks that I happen to be in and trading, and also performance of the general index. So I want to walk you through this. And another reason why is because this process helps to filter out so much of the noise that's out there. FOMC, or Powell said this, Biden did that. It's kind of crazy to think about all the things that get thrown at us every single moment of the day. And by having a routine where we're able to see and execute based off of that, helps to make this whole trading thing that much easier, clearer, and of course far more profitable. So let's hop into step one, which is screening stocks. So I'm going to share with you this screening tool that I like to use. It's called Deep View, and let's share that. I thought that I had the screen share up and going, but here it is. All right, so step one is screening. Using this tool here, Deep View, I screen for a variety of things, and they're all basically pointed at growth stocks, right? So I will go into this tool, and I'll do this once a week, where I have these weekly screens that I've built. It looks for things like sector leaders. It looks for things like stocks that have accelerating earnings and sales. It has a few other things in here, like IPOs with earnings, and IPOs that have very strong sales. And so I'll run through these screens, and these screens will help me form what I call a universe list. So the market has roughly 10,000 or so stocks within it. If I had to flip through every single one of those, it would, we'd be here till next Tuesday trying to flip through everything. So it's much better to narrow the focus to the ones that have the best chances of making big moves. Well, what gives it that kind of chance? earnings and sales and those sorts of things. Because if a stock is continuously making more sales and making more money, changing the way that we live, work, and play, well, those are the kinds of things that people want to invest in. And so it gives it the best chance to make these bigger runs. So I'll run all these different screens here. Like that superior earnings and sales growth. That's for stocks that are a little bit older. For this one here for super sales growth, super fund ownership. I really like the word super, don't I? Then this one, a rocket scan, stocks that have made very large moves very rapidly. Some of them have already passed the screens, like this one here, APP. And then this other one that has a relative strength being at new highs. And yeah, there's uh, different things that I'm screening for within each one of these screens. And uh, but the main thing here isn't necessarily like, oh, well, here's what this guy is screening for. The main thing, main takeaway here is that you are screening for specific things and you're doing it consistently. It's through that process, right? Like, so it's not where I'm screening for one thing this week, something else next week, something else the week after that. Because I'm screening for the same kinds of things every single week, and I've been doing that for years and years and years, that's how this whole process is able to go very, very quickly. And that part of it, moving quickly, well, that's important if you're trading part-time and you're juggling work and family and everything else. You need it to be able to move quickly, but also because you're doing the same things over and over and over and over again, that's how you start to pick up on the nuances of this stuff. So when the general market, I'll flip over to the indexes just for a moment. When the general market started to roll over, we're already saying this up here is a red condition up here, right? So, well, one of the things that I like to do is to filter the market into different color codes, right? So, some of you may have seen this before, where I look at the market through basically three different types of lenses, and depending on how each one of these are doing, it will either be a red condition, a yellow condition, or a green condition. And when the market starts to get choppy, or there's certain elements that are starting to say, hey, we're getting a little bit overheated here, might be time for a pause, that's what prompts the red condition. And that happened back here. I'm not paying attention to, oh, there's FOMC, Powell said this, and all, Biden did that. I'm looking at the things that we're talking about here. And that's one of the powers of having a strong process, a strong routine. So I'm running these screens and I'm building a universe list. As you guys have questions, please go ahead and type them into the chat. We'll be taking questions throughout, and we'll also be taking a full dedicated Q&A at the very end of this. So go ahead, type into the chat as you have questions on anything that we're doing here. This whole presentation is meant to be high level versus getting into the nitty gritty weeds of things. If you do have questions that want to go and dig a little bit deeper into the weeds, just type into the chat and let me know what kind of questions you have. Otherwise, this is all going to be fairly high level. So we build the universe list, and I have my universe watch list. Pull that up right here. And so I'll go through this list. The whole market has been narrowed down to 309 stocks that pass my screens. And I'll add to that list and I'll prune that list each week. I do that once a week. I do that on Fridays after the market closes. So I'll go through this list here and I will sort it based off of the following. stocks that have relative strength at new highs, 3 weeks tight, this oops reversal, slingshot, pocket pivots, volume drying up, and high tight flags. And so by sorting the market in this way, by sorting my universe list in this way, I right away can identify, well, which stocks have the types of things that might be indicating that there's some sort of a pattern setting up, that one of the patterns that I trade. And so once I've sorted the whole universe in this way, now I know that I don't need to necessarily go through all 300 stocks. I just need to go through how many are on here that have the check boxes. Yesterday there was only about 30 or 40 or so. Today there are 252. So quite a few of them have had these extra signals. So maybe next week we have quite a few stocks that are getting ready, that are setting up. So I'll then flip through all of those that have the checkbox, and I'll look for different patterns here. And so I'll expand this and I'll flip through all the charts here. And I have 4 different charts up. They're all for the same stock. So I have a monthly chart, a weekly chart, a daily chart, and a 30-minute chart. This gives me a multiple time frame perspective on each and every stock that I'm going to consider. By having these multiple time frames up, I'm able to see at a glance, well, how is price performing on a monthly chart, a weekly chart, a daily chart? By seeing that, I'm able to see, well, are we running into some sort of a long-term resistance zone? How is the consolidation on the weekly time frame? Are we above the 10-week line? Has there been heavy-duty accumulation week over week over week? Things like that. Then drilling down into the daily chart, I'm able to see, well, how is price pulling in? Is it finding support at something like, I don't know, the 21-day exponential moving average, like this stock happens to be? And then when I take a closer look at the 30-minute chart, I'm able to see, well, in what way is price consolidating day to day? Because it's not where I'm trying to trade intraday, but I want to see how the price action is developing during the day. So I'll do that part. I'll find the stocks that are setting up. And even just in that one sentence, right? And by the way, we're now into step 2, where I'm starting to look for specific patterns. So when I'm looking for these specific patterns, I better already know the type of patterns that I'm looking for, because if I'm just looking for random stuff, right? Like I happen to see somebody over on StockTwits or X or some other platform say that, oh, they see XYZ pattern developing, or they see a cup with handle, or they see a red bunny, or whatever kind of pattern that they're looking for. That's all well and good, but if I'm just taking anybody else's kind of setup, then I don't really know what it is. So before I'm going and I'm looking for specific patterns, I'm defining the specific patterns. And so right here, I'm bringing up my model book of all the different patterns that I'm looking for. So I've already taken the time to name, define, and find models of all the different types of setups that I'm interested in. That way, when I'm flipping through all these names, I'm able to quickly say that, oh yes, this is actually something that I trade that interests me. Great, that goes on to a separate list, a separate sub list of stocks that are setting up right now, and then I'm able to go and do deeper work on that specific stock. All this stuff moves very quickly when you have a routine and you know what you're looking for. And then once you have the discipline to just do that, that's how you're able to make consistent gains in your trading, because you're doing the same thing over and over and over again. And you're looking for specific things. You're not rattled by externalities. Okay, so we have our screening process. Coming into today, there weren't very many stocks that are setting up. So I'm sitting in cash. So when we start to look at, well, what are some of the other things to analyze? Step three, analyze performance. Well, I'm able to say that, all right, there's a few different types of performance that we need to analyze. There's personal performance, right? So how are the stocks that we're actively trading performing? So most recently for me, there have been a few trades that have been on. There was Tesla, right? And I'm going to find the closed trades tab here. Where's the closed trades tab? Yeah, there's the stats, but there's the closed trade. So let's scroll down to the bottom of this. And so I like to keep track of every single trade that I take. I make a bunch of different notes on every trade that I take. My entry, stop loss, target, percentage gain for the trade, high watermark, and position size, and then all of the notes that I've had on each trade. So for the last, say, 10 trades, right? So there's one winner, loss, 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 three losses in a row. Then one winner here, and a loss. Then another winner, another winner, loss, then another winner. And so, well, when I'm going back through these trades and I start to look at them over the past 10 trades, right? Like I'll look at my performance for the whole year, for the quarter, for the month, all that stuff. But uh, I find it important to also look at the performance of the last 10 trades, because that's giving us a more immediate feel of what the market is doing right now. So when the market starts to shift and trades start to either not work as well, or when we start to see some more choppy action, that'll show up in the most recent trades. And so when I'm taking a look at the most recent ones here, well, Tesla did very well. Docu didn't. A recent trade in app didn't. Uh, so that's starting to tell me, all right, choppiness, shift out of those, and then now I'm in cash. But before that, I'm able to lock in gains on many of these other names back here. And that's what helped to lock in a very strong quarter, very strong year, up about 20, 25% just in the most recent quarter. So those that's part of the analysis of the performance, right? To start to see, well, how are recent stocks performing? That's going to give us a great feel for whether or not we should be betting heavier or lighter. But I like to not just look at personal performance. I also like to look at the general market and system, and everything that we were doing with all the screening earlier. Well, with going through uh, the screening process, looking for stocks that are setting up, saying, well, how many stocks are setting up? That's giving us a feel for what the market is doing too. Because if there's a lot of stocks that are setting up that are the types of stocks that I trade, then that's telling me there's a lot of opportunities right now. So maybe I should be putting on trades. Then I'll take a closer look at all the stocks that are setting up, and I'll assess what kind of quality are them. Because if I'm going through my model books here, and let's say that I found, oh, wow, there's a lot of pullbacks, there's a lot of cup with handles right now, and I take a look at those pullbacks and cup of handles, and I find that the quality of them are kind of so, then that's something that's telling me, yeah, there might be some stocks setting up, but maybe they need a little bit more time. Or maybe I find just a handful of setups, but they're of ultra high quality, then that's something that tells me, oh, you know what? Maybe I should be dipping my toes in the water and starting to put some more trades back on. There's in so much value in this routine because again, this is the kind of stuff that help to avoid the drop, lock in profits ahead of the drop, and ready for all the setups that are developing right now. You don't need to catch the bottom. You don't need to sell at the top. What you want to be able to do is capture the bulk of the move, and to be able to do that consistency without a ton of stress while still managing your life. This is really a great way to do it, a great way that works, and a way that I've been doing it for a number of years now. So let's take a look at one other thing that's in this routine, and that's the general market. Right. So we looked at systems, we looked at personal performance, the system being all that screening that we did earlier. We looked for patterns. Now we're taking a look at the general indexes because uh, I find it to be very useful. So that's why I do it. And I look at these indexes here. I look at the S&P 500. I look at the NASDAQ, the Russell 2000, the New York Stock Exchange, the Dow, and I even keep the IBD 50 up because the IBD 50 is a halfway decent representation of the types of stocks that I like to trade. I like to trade growth stocks. The IBD 50 represents growth stocks. So when I see a few things in here that are starting to showcase that, oh, they're rolling over a lot. Like for example, on the Dow had distribution days for the past 6 days. 6 out of the last 10 days on the Dow had distribution days. That's pointing towards heavy duty selling in the market. That's not a very good thing. If you're holding stocks, that's not a very good thing. If you short the market, maybe it is a good thing. But it's one of those things that says that, you know what, the market is probably getting a little bit heavy and likely to take a bit of a drop. Well, we saw that happen on Wednesday. Then another thing is this right here. This is an indicator that shows the number of stocks making new 52-week highs versus new 52-week lows right here on the NASDAQ. Now, the reason why I find that to be important is because, logically speaking, how is the index going to continue to move up if the stocks within it are making more new lows than new highs? That happened right here on Friday, December 13th, and then again on Monday, and then again on Tuesday. So if the stocks within the NASDAQ are making more new lows than new highs, then that's something that we should start to be cautious about. And then, what happened? We get the big drop that we had on Wednesday, and now we're having a little bit of a recovery. But to just start to pump the brakes, that's what this traffic signal is about. It's not saying to just start to short the market. It's not telling you to just toss out all of your stocks. All it's saying is cautious, regular, and then all systems go. It's through those lenses that I manage my risk, and things have worked out pretty well this year. All right, let's see. We've got a couple of questions, or no, those are comments that are coming in. Two comments from Minnie's Bub. I'm in cash right now, besides long-term positions. Uh, Seems like a pretty good place to be. That's pretty much where I'm at. Well, right now, the way that I trade my so I have an aggressive account. That's the one that spoke about. I think it was last week, right? So time is flying. Last week, I believe it was last week that I shared that one of my accounts is up 189% on the year. That's an aggressive account. The bulk of that happened in the last quarter. That one right now is in cash. And my longer term account is also in cash. Uh, that one I swing trade as well. The only thing that I tend to buy and hold, and so far I've been holding on for a very long time, is Bitcoin. So that one is still fully invested. Let's see here. Minnie's Bub says the overlap of November December has been the most profitable ever for me. Congratulations, that's great to hear. Had amazing trades. Wonderful. Yeah, so let's switch into the Q&A portion uh, of the show. If you have questions about anything that we spoke about earlier, anything related to, say, the stock screening process, or looking for patterns, analyzing performance, whatever questions that you have, type them into the chat. Or if you have other questions that you'd like answered, go ahead and type that into the chat too. In the meantime, make sure that you like and subscribe wherever you happen to be tuned into. I see a whole bunch of people watching over on X and YouTube, a couple of people watching over on Twitch. So welcome and blessings to all of you. If you have not signed up for our free newsletter yet, make sure that you sign up. Go to marrowwealth.com/newsletter. We put out lots of free education multiple times a week, and looking to do a lot more of that in the new year. So go ahead, let me know what questions you guys have, and let's get things going. Switch back over here to the charts for a second. Let's see. Yeah, of these recently closed trades, some of them are recovering, right? So the Docu, I had bought Docu as it had popped above this short-term resistance area, got shaken out of it on Wednesday. It looks like it's recovering. It looks like it might be able to set up something again. The thing with any of these trades, don't necessarily want to rush right back into something just because it happens to catch a bounce. We want to re-enter trades when they're showing the proper kind of setup. And so if we take the drawings off, where is the setup? Well, maybe if we take this off of here and delete that and delete that, maybe there's a descending trend line over here developing. Well, if you're a trend line trader, then you would need price to break above that trend line, which means that the pivot is somewhere up here. If you're looking for a confirmation, you would want it to get above this level, somewhere at around about $100 a share. So it would need more time than trying to get in down here, because if you get in down here, yeah, maybe you're capturing the low, but you're also saying that price will break out because you're buying ahead of any sort of breakout confirmation. And so what if price decides to roll back over? That's one of the reasons why I like to wait for the breakout, but I'll also look for advanced pivots where I'm looking at pivots potentially lower in the base, like a trend line break, versus buying way up here. Minis Bub mentions JBL. Let's take a look at where JBL is right now. Yeah, not bad. Gap up after earnings, pulled back. Seems to have recovered some. Uh, let's get rid of some of these older annotations. All right. So one of the things that JBL was able to do was when it pulled back. You see how it gapped up and it gapped up above resistance right here. It gapped. So when price gapped up, it gapped above that dotted line. Price pulled back and it closed above the line. Today, it's following through. So that's telling us that, okay, price got above resistance, and now that resistance is acting as support. That's something that I love to see. Fiona. Fiona says, what is the symbol you use for IBD 50 ETF? The symbol is ticker FFTY. FFTY. And I also have these. I made a list in TradingView of all the tickers for each of the indexes, just in case, because well, what can happen in TradingView, right? When I have this layout, and I'm actually planning to uh, publish a video of my TradingView layout. I'm hoping to be able to get that out later today. But sometimes, well, what'll happen is you'll be on a chart and you type in something like, oh, like let's see what Tesla's doing, and now all of a sudden, you're not in the correct layout. You're in the layout that you're looking at for indexes, and it's like, uh-oh, well, what do I do? You If you have a list, it makes it a little bit easier to get back to those names. So these are the tickers that I'm looking at. Looking at SPX, IXIC, RUT, NYA, DJI, and FFTY. And yes, Fiona, the IBD Innovator, 50 is the correct one. Yeah, Innovator IBD 50 ETF. All righty. Any other questions? Any other questions from you guys? Is that it? Are we all good? We all ready to crush it in 2025? Minis Bub says, you didn't answer my full question. Well, what's your full question? I'm scrolling through here. I see a few statements, but I don't see a full question. So if you want to type it in again, uh, go ahead and type it in again, and we'll see. Here we go. Also, uh, how would you assess the earnings of the stock? And do you hold through earnings? If so, how do you do your due diligence? Okay, and so you wanted to use JBL in this case. So let's go over to Deep View, and this is where I would start. Right, so let's pull up JBL and take a look at some of the stuff in here. All right, so how would you assess the earnings of the stock? So I would assess it based on how it performed versus last quarter. So the way that DeepView organizes this, the way that DeepView has their organization here is that it's looking at this quarter, and yeah, we've got the quarterlies. So it's taking a look at uh, Q4 of 2024, and it's looking at it not versus Q3, but it's looking at it as Q4 of 2024 versus Q4 of 2023, right? I'll say that again. It's looking at not at Q4 versus Q3, it's looking at Q4 versus Q4. That's important because it's doing a comparison that normalizes seasonality. So it's telling us that, oh, well, earnings is actually down versus where it was in 2023. Same thing with sales. So it's actually on the decline. So when I'm looking at that, it's one element of what I would be assessing. Is it a positive one? No, it's declining. Would I prefer to see it increasing? Absolutely. But it's not something that would make me necessarily abandon the trade. Well, if I were interested in this, what I would do is I would go over to my website first. I would go over to marrowwealth.com and I would click on tools and go to trade gauntlet calculator. Now, this tool is free. All you have to do is just go over to marawealth.com and click on tools and you'll be able to get it. Now, if I'm interested in JBL, I'm making it jump through all the hoops here, right? So there's a whole bunch of fundamental criteria: annual earnings projections, 25% or more, ROE, EPS growth rate, earning stability, etc. I want to see, does it have these qualities? Because historically speaking, when uh, stocks have had tremendous runs, they've had at least some of these elements. Then when I go further down the line, I start to analyze the chart pattern, the base. I'm analyzing the confluences around the target, around support, around the entry. Then I'm trying to assess, is this growing? Is it in a growing industry? Does the story of it make sense? Does the management own a significant portion of it? Are there multiple setups within the same group? Is the fund ownership increasing? Then I'll take a look at the group rank and I'll try to see, well, is the group rank strong? Is the group rank improving over time? Maybe it had a significant jump. That's something that can really help put the wind in the sails of a stock. If the group rank has significantly jumped, so if the market is all of a sudden favoring a particular group, then all the stocks in that group might start be getting a boost, and that's something that I would check off there. Is it a leader in the market overall? Is it a leader amongst its peers? checking off those boxes. Then how is the stock versus the market? And I would check this off. And then if there's anything that I see that should give it a little bit of a boost, maybe it's a sector leader. Maybe this stock has been a sector leader a number of times in a row. Maybe it's an ultra tight consolidation near a key moving average. I'll give it extra points for those things, and then I'll have my score. And if it scores 7 or higher, then great. I want to place a working order for that one. If it does not, then what I'll do is I'll place an alert for it. And I've gotten a number of questions recently about, well, when do you place an alert versus when do you place a working order, and what's the difference? The difference is if I'm looking to get into a trade, right? So let's take a look at JBL, and let's make this a little bit bigger here. Right? So JBL heading into earnings. Do I want to place a working order at this level? No. Why? The reason why I would not want to place a working order right there is because there's not a ton of confluence right around the entry, right? There's more of an advanced entry down here, or maybe even a little bit higher right over here versus this one that's right there. So I'll place an alert at that level, and if price is able to get through it with power, meaning that it's breaking out and there's heavy volume, then I'll want to take a look at it, because I want to take a look at it in real time. Is price gapping up like it did? Or is price starting out down here and coming up through the pivot? Because if it's doing this, where it's starting out down here and coming up through the pivot, what that does is it gives us an opportunity to say, okay, I'll buy as it's getting through the pivot, and we could place our stop right below that day's low. That lets us really tighten up our reward to risk on that particular trade, and doing so in a way where we have higher probability of success. It's almost like a rocket that's getting ready to launch as it's coming through the atmosphere, and we're able to see in real time what's the volume like. Because if it's coming through that pivot with volume and we're able to see it, then it's like, all right, there's a lot of fuel in this rocket. Let's give it a shot. And so that's what I like to do. So, Minis Bub, does that answer your question? Does that answer at least part of it? Oh, you had also mentioned holding through earnings. All right, so let's say that I bought JBL, and I had JBL, I don't know, let's say that we bought it way down here. Let's say that we held it through the whole thing, right? So got in down here, and it's earnings, and I'm sitting on a 6% gain, roughly speaking, right? Right before earnings. Would I hold? I probably would, but I probably would because of a couple of the types of rules that I have. So one rule that I have is that if I'm going to hold through earnings, I want to have a profit cushion. So am I in profit? Yes or no? Well, in this case, yes, I'm up almost 6% heading into earnings. Great. Are there anything that's giving support to where I've got my stop loss, right? And so in this case, I would have raised my stop to break even. Why? Because if I got in over here and price ran up and then it pulled back, tested my break even point, and then rallied from it, then that's telling me that, okay, that level right at around, well, what is that, 126, 127, that should act as support, because it acted as support over here. back in the middle of November. Great. So now I've got a couple of reasons why it should act as support. It's not just something that I think should happen. It's something that was the resistance turned into support. There's your evidence. And then price got some lift off of it. And not only that, now the 50-day moving average has caught up and crossed above that level. So we're stacking confluences around that level. So that's what would tell me that, all right, yes, I will hold through earnings here because it stacked up the levels of support. And that would be part of how I do my due diligence on it. Fiona says, what score should it be to be on your watch list? So Fiona's question is about the trade gauntlet. So in order for me to place a working order for a trade, I want it to score 7 or higher. If it scores a 6.99, I'm not placing a working order for it. But I might place an alert. The reason why I want to have 7s or higher to place a working order is because when I went back and I did my post analysis, all of my biggest winning trades all scored 7s or higher from working orders. So great. I could eliminate all the ones that don't score 7 or higher. But when I looked deeper, I saw that the ones that had less than 7 but broke out with power, those ones tended to do better too. So that's why those ones get an alert. If it scores a 6.5, a 6, a 5, or doesn't even qualify, let's say, to go through these hoops of the gauntlet, then I'll place an alert and I'll see, does it break out with power and in what way does it break out? Because breaking out with power resolves a lot of other issues. All right, here's another question from Many's Bub. Are you willing to take the risk that earnings could turn out bad and gap way below the stop loss and take you out with a massive loss? Yeah, absolutely. Right. So that's fear talking. If there's reasons on the chart that say, okay, though we might have and momentum might be shifting, then that's when I'll exit the trade, but not before. Right? Part of it, well, the way that I look at trading is that I want to operate within a certain set of rules, a certain framework. And it's not my job to pull out trades early. My job is to make sure that whatever trades I have on, that they're following the rules that I've set out. If they are, then they get to stay in. If they're not, that's when I kick them out. If I don't follow my own rules, then I'm not allowing the game to play itself out and to get to the kind of outcomes that the game is designed to do. So it's not my job to say that, oh, JBL's a winner and maybe this other one here is a loser. No, it decides that for itself. My job is to make sure that this follows the rules that are set. And if it does, it's in. If it doesn't, then it's out. That's the bottom line. All right. Any other questions? Well, we're a little bit over time, but that's okay. Again, if you are not already on the newsletter, make sure that you hop on the newsletter. There it is on the ticker scrolling on the bottom of the screen, marawealth.com. Also, make sure that you like and subscribe wherever it is that you happen to be watching from. And let's see, looks like we've got another comment coming in here. Fiona says, we always have a stop loss to work with if the stock goes south after the earnings report. Yeah, that's true. Here's another thing. So let's just say that we're in this trade and happen to do well after earnings, but let's just say that you wake up and price is scheduled to open down here. What do? Rather than keep the stop loss on and just sell immediately at the open, what I would do is see what price is doing pre-market and then say, okay, this is already a sunk cost. Where do I want to cut the loss completely? So then I start saying, well, where's the next level of support? If price is opening here, where's the next level of support? Probably down here, right? Somewhere in this vicinity, either here or maybe even here. And then I decide, well, do I want to allow price to fall another $10? That's the assessment. Maybe the answer is yes, maybe the answer is no. But if we're able to see in the pre-market what price is doing, then we can treat it as a sunk cost and not just sell immediately, but try to come up with an alternate plan. And if you really want to take it to the next level, start to think through those kinds of things before the earnings announcement, before the trade is even closed. So that way, you could say, oh, you know what? Yeah, I am prepared. If price does gap down here, or let's say that it doesn't gap down there, maybe it gaps over here, or maybe it gaps down to this level. You're already starting to think through the different possibilities, and that way you're not caught off guard. When you're not caught off guard, when you're prepared, you have that much more confidence to be able to trade well, trade effectively, and maybe even you see price coming down over here. You can see, and you start to see price rallying. Maybe you're even able to add a little bit more and then capture the upswing if that's part of how you trade. But the possibilities are really endless. That's a little advanced stuff. Hmm. Most of the time too, well, like, so let's say you got into JBL over here. I would probably, the way that I trade too, I always like to sell some into strength. Like, I'm not uh holding the entire position throughout the entire move. So once I get about twice what I've risked, so on this move up over here, I'm probably taking off about a quarter of the trade and getting my stop to break even. So even if price were to gap down, right? So let's say that, well, what kind of move has it had? In order to gap down over here, we need to gap down 25%. One of the things that I like to do is see, well, what's the worst move that it's had after earnings? Over here, it had a 16% drop after reporting earnings. All right, that's pretty gnarly. So where would so I would start to think, well, where would a 16% drop, if it had that same kind of drop, where would that land us? Right down here. So in that case, I'm probably losing about twice what I risked, right? So in this example, the initial risk was 4.5%. That would take us to about 10.5. All right, so a little bit more than twice the original risk. Not an 8R loss, but more of like a two, maybe a 2.2R loss. But it's even less than that, because if you have a process where you're also going to sell into strength along the way, you're locking in those profits and there's less risk on the table. Well, one of the great things about selling into strength. It's keeping you at equity curve highs. Got time for one more question before we call it a day. And if you guys do have additional questions that we haven't answered, we do have a trading accelerator program where you're able to hop into our private Discord, talk to us all day long, come to meetings like this. We've got them on Google Meet, and we're meeting on the weekend. All the microphones are opened, videos are open, and then you and I are chatting as a group. And it makes for a real learning environment, much smaller than this. There's advanced lessons in there. There's you're getting my analysis, and you're able to talk to the other members too. And the other members, quite frankly, are fantastic. They're really great people in there. So go check out the accelerator program. I'll drop the link into the comments if you want to go check that out. But I think that is about it for today. I don't see any other questions come in. Fiona, you're welcome. Minis Bob, you're welcome. All righty. All right, everybody. So that is it. I hope that you enjoyed this. Have a wonderful rest of your weekend. And if I don't see you beforehand, God bless and Merry Christmas. Take care. Much love and God bless. Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Marrow Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.